Yomi, it's great to have you on the show today.
Hello,
First of all, maybe I should get a perspective on the strengthening of the Naira. We've seen it trade really in a reasonably tight range over the last few sessions. Your thoughts on the strengthening we saw today?
Well, the strengthening that we had today, which actually came about more like close to the end of trading, was on the back of selling of FX into the market by a corporate, probably an FDI. That was what caused the Naira to strengthen today.
Of course, we know that the foreign investors are also looking at Nigeria quite closely. Over the last few weeks, we've seen significant interest in the bond market, clearly because of that JP Morgan move to add Nigeria into its global emerging markets bond index. But can you give us a sense of how much has flown into the market over the last few weeks?
Well, in terms of how much has gotten into the market, I think from the offshore side, from our own perspective, we'll say that close to about $600 to $800 million must have come into the market. But in terms of trading in the market itself, the trades done are probably above $2 billion mark, because we've seen quite a lot of activity. Like you said, ever since the JP Morgan index listing was announced, the rumors spread that some Nigerian bonds would be listed. We've had considerable interest in the FGM bond market, and so we've seen quite a lot of flows coming in. And then you see there also the activities of the brokers. There are a lot of brokers in the market right now, so we're seeing a lot of trades happening in the market. The yields have dipped from above 16% to 13% levels. That's about 300 basis point dip on the back of the demand. Also, another driver in this market has been the fact that analysts that were polled regarding Nigeria's expected inflation levels for 2013 all came up with levels of between 8.9 to 9.9% for next year. So we're looking at single-digit inflation for next year. And so a lot of people are taking positions based on this information.
All right. And then let's talk about pre-MPC activity. We know we're having that key interest rate decision next week. How is the bond market shaping up ahead of that? We know this week, for instance, we've seen yields come down. Will they continue to come down? And this week, I think we've seen, on average, maybe about 70 basis points shed off yields, and really reflecting the increase in bond prices this week.
Yes, we expect the yields to continue to come down. Most projections for the MPC are that the rates are probably going to remain the same, at the same level. But I think the information on inflation for next year is quite critical in driving the market.
What about the local fund managers? How much are they into the bond market? Because what we're hearing now is that, given the rally we've seen in the stock market, and yet today the market is up 20%. Most of those gains have come over the last 1 month. We're seeing a lot more interest in equities. Are you seeing that reduction in demand for bonds from the pension fund managers as well?
Well, the pension fund managers, I believe, most of their activities, especially in the last few weeks or last few months, has been around money markets because of the rates we see in the money market. You see, because they need to up the yields on their portfolios, a lot of them went into the short end of the market where the rates had gone pretty high to beef up the yields on their portfolios. This would probably mean that they more or less ignored the bond market. So you don't see a lot of activity from the local PFAs in the bond market. You see more of the activity in the bond market is coming from offshore.
What type of yields are they getting in the money markets? On average, we'll see yields somewhere around 13% for bonds. And what are the levels like for the money market that make them attractive?
Well, we're coming from highs of over 20% to probably right now we're looking at about 16-17% levels at money market.
Okay, so let's look forward now. We have the MPC decision next week. What are your thoughts on where yields would go ahead of that decision and, of course, right after that?
Ahead of that decision, I expect that most people will try to lock in the the levels that are available in the market right now. So that kind of demand is going to put pressure on the rates, and you'd expect rates to continue to trend downwards.
All right, thank you so much, Yomi, for your perspective there. Yomi Balogun joining us from Stanbic IBTC, giving us a perspective on Nigeria's fixed income and, of course, currency markets.